Hey there, random internet strangers. It's Random Crypto Guy here with the weekend update. And joy, oh joy, oh celebration. We have broken 10,000. Looky here, this is the Bitcoin hourly chart. Just want to go over this real quick. I know everybody's been going over it, probably sick of hearing about it almost. But we jumped up almost to 10,150, not bad. And we drop back down. We're starting to form support here. We got a nice rejection candle here, and then we got a nice rejection formation here. We got a bear candle and a bull candle. You add those together, you get a nice rejection candle again. And heading down there again. Let's see if we can hold this support through the weekend. The real test will be Monday, as far as that is concerned. But congratulations, now that we know that we can get there. That psychological level is broken, and that's going to make everybody start foaming at the mouth, and the squawk boxes are going to start talking about it Monday. And when everybody's, all the big money's back from their golfing and whatever. Ooh, 10,000, that psychological level. We broke it, and nothing but blue skies up above. So we're looking good. What I wanted to talk about today, though, even though this is great, it's fantastic news, but everybody's talking about that, I want to talk about something else. And I want to talk about Bitcoin being a store of value. And to do that, we need to go to the daily chart. Now let's go to the weekly. It's a little bit easier to read. And zoom in. And this one I found all the way back here. We got to add a window here so that we can push this over, scrunch it up a little bit. And I want to talk about the lows after each parabolic run. Now, everybody wants to talk about the highs and make money and everything else, but nobody wants to talk about the lows. And so I started taking a look at studying the lows, because that, to me, determines where the store of value actually lies. Not in the highs, but in the lows. So if we look here, and this was 2011, we were down here at 50, 60 cents. Then we had this parabolic run here. Went all the way up to $32 almost. And then come crashing back down. And back down to $2. So it's gone up in value. Then we go moving on. Kind of bebopped and moped around to this next parabolic run. We got up to, from $32. Wait, hang on. Let's zoom in a little bit. Let's go back here. I think there was another one in here somewhere before we. So this is the weekly. Yep. Zoom in. So let's look for the next run. So we own another run right here. We started at 12. This is where my cousin was. It was right around Christmas time, so it was just before this run here. Me, like a dummy, didn't buy any, and look at what happened. Went up to $300, and then come crashing back down. I would have had an opportunity to buy at $12, and it never dropped lower than 70. So we went to 70, and then the next run from 70. This was into the halving. After the halving, bam, another parabolic run up to 1200. But what did it drop to after 1200? Down to 200, 170. So we went all the way down to 170. And we started building up, and then boom, another parabolic run. 20,000. Everybody remembers that one. I actually almost bought right here. Boy, that would have been a mistake, eh? I actually almost bought right in here. I can show you on my Coinbase account sometime. But I didn't. I knew something was up. I knew not to buy into FOMO. I had a few beers at the time. So I'm glad I didn't. I've still been holding those bags. I probably would have dumped it somewhere over here for a loss. But then how low did it go? Down to 3,200. So it keeps increasing in value. The lows keep increasing in value. Back up to 14. Down to 65. Now, if this becomes a parabolic run, like these guys here, I'd say I don't think we quite hit a parabolic run yet. But if it does, I don't see it getting any lower than this. Shouldn't get any lower than 6,500. I personally believe I don't think we're going to get below 10,000 ever again if this goes parabolic on this. And we're heading into the halving, so it's almost for sure that it's going to be a parabolic run. And so because of that, the whole dang thing is a parabolic run. If we look at the daily and zoom all the way out, we can see that it's swoop. If we connect the lows from beginning to end, hang on, just a little bit more so we can get the whole. It starts off slow, and we keep getting these little bumps, and each time a little bit more. And then here's our next. So we got from here, then here, then here. Keep going up and up and up. Sounds like a good store of value to me. And if this continues, I'm sure that somebody could draw a curve there and get a baseline as to this parabolic movement of these lows and be able to project and see. I know that the logarithmic chart also kind of does that, but I think that this has gone parabolic. The whole thing has gone parabolic if you just look at the lows. So that to me tells me that this is a good store of value. Over 11 years, it continually increases in value. It's not the volatility, it's the lows. Each time get higher and higher. So what does this mean? Crap. Hang on. Close that folder. I didn't mean to close that folder earlier. I gotta reopen it. In 1913, and I'm sure a lot of you know this, but maybe some of you don't, had the meeting at Jekyll Island. This is where they designed the Federal Reserve. Actually, it was in 1910. My mistake. You can read through this. Basically, a bunch of rich guys and this one senator got together. And Mitch McConnell has nothing on Nelson Aldrich. But basically, they passed the Federal Reserve into law on Christmas Eve when the Senate and Congress and everybody was home with their families. It was just I think there was like 5 senators present or something like that, and they all got together and secretly voted on this the next day, and then surprise, when everybody came back from Congress, everybody was like, surprise, we have a Federal Reserve now. Oh. And then so in order to fund the Federal Reserve, they put income tax into the Constitution. They amended the Constitution so that you could have income tax. Before it, our dollar was backed by silver. And they did this because we were a save and spend economy, and they wanted us to become a borrow and lend economy because the banks make more money and you can make more taxes. You increase the power of the federal government. So all these power and control freaks got together and created the Federal Reserve to change us over from a save and spend economy to a borrow and lend economy. And that's why it's cheaper, to lend. And so everything that you buy that has interest is a tax. Because the reason why is because the Fed has had to purchase. Well, I'm getting a little ahead of myself. So this is what they created. It's all the tax money goes into the stock exchange, and that's what's inflating our markets right now. And I'll prove it. A couple of charts right here. This one, I just wanted to show this real quick. This is the purchasing power of your dollar. Remember the downward slope or the upward slope of the purchasing power of Bitcoin? Well, here's the downward slope of the dollar since 1900. Today, in today's dollars, the $1,900 is worth 2 cents. Would be, if you took $1 and went back in time, it would be worth, in today's dollar, and you went back to time to 1900, it'd be worth 2 cents and not $1. And back then, but if you took $1 from here and brought it to today, it would be worth $25. And that's because they keep inflating the money supply. It's the Fed's balance sheet. Is basically they print money out of thin air. It started way back in 1971 when we went off the gold standard. And then it just kept getting worse and worse. Took off in the 80s with deficit spending with Ronald Reagan and voodoo economics. And then, of course, the bubble of 2001, the dot-com bubble. There was a small bailout there, but that started the process rolling to where we had the 2008 bailout. And that's this big spike right here where the Fed just started printing money out of its ass, buying up treasury bills, buying mortgage-backed securities, and they take in all this debt from the banks, and they print out the money. And so they're just sitting on this. And then they did what's called unwinding. Here, they started in really started taking off and really trying to unwind around December of 2018. And if you look at the chart of the S&P, you can see that when they started to unwind it, it started crashing the economy. You can see that boom, 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 boom. They couldn't get it. They didn't want to crash the stock market, so they started printing it up, printing the money again, and purchasing toxic assets. They're in too deep now, and they can't get out of it. They're between a rock and a hard place. And so basically they're just printing money, buying treasury bills, buying all this stuff, and that's paid back with your tax dollars. That's what bond is short for bondage. You are bonded to pay this money. So you're paying all Wall Street's mistakes. Paying for Wall Street's mistakes is what you're doing. So here's the balance sheet. You can see this was what they projected. They wanted to taper off and unwind the balance sheet and do quantitative tightening. And this was the projection, but that's not what's happening because they've inflated the stock market so much that money doesn't get down to the real economy as much. That's why we're not seeing like hyperinflation, because it's all stuck up here in level 2 and level 3 money and not getting down to the real economy. So this is what they projected to happen, but that's not what happened. And it's also happening in Europe. They're doing the same thing. This is the ECB, the Fed balance sheet. Same thing's happening over there. Now, this is an older chart, but it's still. And by pumping up that money supply, it decreases your purchasing power.